Hi everyone, welcome back. Today I'm going to discuss the biggest topic of all times that I personally think everyone should at least walk through life insurance once in a while. My name is Catherine Lee and I've been an insurance broker for the past 12 years. The goal of my channel is to help empower you with the knowledge about insurance so that you can protect what matters most to you. This will be broken up into 3 videos. Video number 1 will cover topics like what is life insurance, common responses I get about the topic, and how you can leverage it in your life. Video number 2 will dive into the 3 main topics of life insurance in the market. I'll go through the pros and cons, comparison between the plans, and how you can leverage them to your estate planning. Video number 3 will go through the steps on how to figure out on your life plan. Steps that I use to help walk my clients through to help them realize how much life insurance they should buy and which plan to buy, what are their expectations and how to meet them. So let's dive into it. What is life insurance? An insurance that you buy that's based on the life that you want to insure, which could be yourself, a parent, a partner, or dependents. The insurance pays out to the beneficiary or multiple beneficiaries at the time of death. For business, people tend to insure the key personnel. That could be your CEO, founder, or someone who could disrupt business activities because they're not there. A lot of people are unsure how to approach this topic because it's taboo to talk about someone's death. It's not a positive attitude if you're thinking about someone's death. It's expensive. And a lot of people just want to say, let's focus on getting older first before we start thinking about death. Here's the problem though. Ask yourself these questions. Do you currently know anyone who's going through health issues like cancer, stroke, or heart attack? Do you know anyone who recently passed away, especially a close friend, family member, or relative? The answer is most likely yes. If you haven't encountered anyone's death, then lucky for you. I hope you don't have to go through it. However, death is among us and it's not easy to cope with it, especially for the immediate family members. As much as we try to ignore the big elephant in the room, being oblivious or ignorant doesn't make us bliss, especially for our families. I believe having life insurance is just being responsible and it shows to your family that you care for them enough to set aside some money in the event of a premature death. Here's the reality. When someone passes away, it's going to change them. A loss and a grieving period takes a while. Ask anyone who has gone through it. If you feel like the world doesn't care, then you should also know and come to a realization that no one will take care of your family better than you. Wouldn't it make sense to prepare an estate plan? One that would take care of your family even when an immediate family member passes? Why? Life insurance allows your family time to heal without the pressure of going back to work to support themselves to pay the bills. Because that person is no longer in the picture. Then yes, you should also really pay attention until the end of this video and follow up on the next few videos that's going to come out in the next few weeks. I'll provide you tips on how to apply for life insurance, how to use it to safeguard your assets. Here are the top reasons why people buy life insurance. Number 1. You have coverage from day 1. You could buy the cheapest life insurance product, which is $15 a month for like maybe $100,000 term insurance for someone who is a non-smoker and age 35. If anyone tells me they can save up money on day 1, it's not realistic. It could take 6,667 months to save $15 a month for $100,000. That's going to take 555 years. Even if you put away $200 a month today, it'll take 500 months, which equals 42 years. How fast do you think compounding interest can do for you, even if you start saving that money up today? Number 2, uncertainty of when death will come. We know it will happen, but we have no idea when. You can't know when you will go, but you know it's coming. Number 3, health reasons. If you're young and healthy, it's the best time to buy life insurance. Premiums are cheaper due to the probability of you passing away is lower. If you have health issues, it's going to cost you quite a bit because the urgency of buying has gone up and the probability of death for you also has gone up. It's almost a game for life insurance. When you don't need it, the premiums are cheap. When you need it, the premiums are high. So when is the best time to buy? As soon as you can while you're healthy. Number 4, family health history. Not a lot of people know that your parents' or siblings' health can affect your rates. There are certain diseases that can be passed down due to genetics. That increases the odds of getting what your parents or siblings have. So the best time to buy life insurance is while you all are still healthy. Number 5, you want to leave some financial support to those you care about. And that can include family members, friends, pets, or charity work. Now we have established why you want to buy life insurance. There are things that people don't know about. I've heard common responses that makes me cringe because I see a lot of truths that people can't see. I hope to bring you clarity. So here are some responses I get from my clients. Response number 1, my family can sell my house or assets to liquidate. How fast do you think they can sell and move into a new place? It's not an overnight. Go speak to an estate lawyer, realtor, or other professionals, and they'll tell you there's a process. Here are some facts that people don't know about. If you still got a mortgage, a car loan, and outstanding debts, it could take 3 to 6 months to clear those debts and then transfer the title over to your family members. The cash in your bank may not be accessible to pay the bills. Does your spouse have access to the same account, ideally a joint account? If not, then it's frozen. Over the years as an insurance broker, often I've seen husbands own the cars and houses without the wife on title or vice versa. Big mistake because it's going to drag the process longer. Talk to a lawyer and they'll confirm it with you. If your intentions were to leave your assets to your spouse, you should have them entitled today, or at least a will in place. Hopefully you don't have some crazy family members who might want to come after your assets like your parents or siblings. The lawyer has to do their process, and the earliest I've seen a spouse get a primary home is within 3 months, because you know how? The home was mortgage-free. Meanwhile, your living spouse has to prepare final expenses like funeral costs, your taxes, and pay outstanding bills without your income or support. The question I ask is, do you have 6 months of savings that they can access to, or at least they have access to a line of credit without your help? Most likely not. Your assets will stay frozen until debts are repaid and all the final steps have been taken care of in the eyes of the government. The most popular response I get is, I'm dead, I don't have to pay taxes. Where in the gods have you heard that? Every calendar year, you are going to have to pay taxes even during the year that you died. Not to mention there's probate fees, aka death taxes. You can check this on the CR website. $0 probate fee on the first $50,000 of asset transfer. You're not going to like this part, but after $50,000, it's going to be 1.5% probate fees. Typically, you might be leaving behind $100,000. Expect $1,500 probate fees. You're leaving $500,000, that's $7,500. If that hasn't scared you yet, did we mention that when you want to sell your real estate properties, basically maybe not your primary home, but a rental property, say you have $300,000 capital gains, then your taxes might be minimum $30,000. Look, the point of this is to tell you that if you got more assets, you got more taxes to worry about at the end of the day. Do you as a real estate investor believe in cashing out your properties, or was it meant to stay within the family for your children? If yes, then you might want to plan your insurance properly. Leverage it to your advantage to protect how much you want it to stay within your family. For families where your debts are high and that your spouse can't live without your income or support, insurance is still the key. It doesn't matter what stage of your life you are in, having life insurance helps protect your family better than anything else I've seen. Here are the common things that families go through after a death of an immediate family member that they don't anticipate right away. Funeral and burial expenses. Cremation, cheapest I've seen is $2,500 to a funeral with a viewing as little as $15,000, not including the plot of land or tombstone and etc. If you've gone through a medical period where you're sick and off leave, you could be wiping out your family's emergency savings before the big D-Day. That may also include the loss of income. Probate fees, which is also known as death taxes, tax filing still need to be done and submit your taxes owed. Your creditors will make their claim on your assets before distribution. And there's professional fees like lawyers and accountants, and etc. In order to keep the status quo for your family, it is best to have a life insurance policy that would help your family during these hard times. Here are the key benefits of having a life insurance. Death benefits are paid by the insurance companies are not taxable unless it's structured under a business where you expense the life premiums. Death benefit bypass probate fees. So here's what I've seen over the years. When a client passes away, I help their family walk through the claim process. Every claim requires us to fill out the form by the beneficiary or multiple beneficiaries. You need a death certificate that explains the cause of death, signed off by a doctor. If the death certificate is completed outside of Canada, just know that there's a few more steps to confirm the accuracy and investigation of the cause of death. As long as the death is not questionable in the eyes of the court, insurance company, or government official, then your family should receive a check within 2 weeks after submitting the claim. That's a typical smooth process. Pretty fast and easy for your family. So what would be questioned in the eyes of the court, insurance company, or government official? Well, something like a missing body. By law, a missing person could take at least 7 years to be declared dead in Canada. Or investigation of murder. That brings up the most popular response, number 3. What if my family murders me for life insurance? If the beneficiary murdered the insured, the beneficiary is suspected of murder, no payout until the investigation is completed. The beneficiary has to be deemed innocent to receive the payout. You may have heard a lot of stories about families murdering another trying to claim for insurance if the beneficiary is suspected of murder. The insurance company will withhold that money until the investigation is completed. No one who committed an unlawful act, such as killing someone, shall benefit. The next popular follow-up question I get is, who shall get the life insurance if the beneficiary is found guilty? It's case by case. They typically remove the murderers off the beneficiary list. Once the trial is over, they will review and leave the money for the intended beneficiaries like children and other innocent parties listed in the will or the policy. If there's no other parties, then the money will be in the estate of the deceased. The will tends to take precedence over the beneficiary list. However, it doesn't mean your family members who you left out of the will or contract will not try to sue. Lawsuits can happen at any time. I'm going to share with you a story about a client who allowed me to share this strategy. I've amended some details to hide my client's identity. I have seen my client creatively try to avoid drama with their family by creating a will with a good lawyer to make sure their families shall sign off a document waiving their intentions to sue if they wanted more money. For example, a mother of a successful business that is worth $1 million, just to keep numbers simple. Her daughter is very involved in her business and she felt like her daughter shall take over the company if the mother passes away. The mother takes out $1 million life policy today based on the company's evaluation. She puts it in her will because she has 2 kids, a daughter and a son. She intends to leave the company for the daughter and give $1 million to the son based on today's evaluation. Both could be evaluated more down the road. The company could be worth $2 to $3 million in 10 to 15 years, but there's really no ceiling on potential growth. But the mother says that would be dependent on my daughter's skill to grow the company. She deserves it. Meanwhile, the life insurance could be worth maybe $1.5 million in the next 10-15 years. The mother does have some other assets that she would like to dissolve to her 2 kids that will be left in the trust. The ratio will be dependent on the evaluations at that time. The mother is aiming to make it even, but it's possible that the daughter with the company will get away with more. She leveraged this life policy of $1 million that she bought today into her agreements. If the son doesn't accept his sister taking over the company at the time of the mother's death, he will not receive a penny from this date. He will need to find his own funds to sue his sister. The $1 million life policy will go to the sister if the brother refuses the will. The mother made the will based on today's prices and evaluations. She's not going to update her will every day or every year. She'll try, but it's not realistic. What did the mother want to gain out of this? She simply wanted her children to have a fair share of assets. If her kids decided to sue one another, they'll lose their shares. Before they can accept what she has given to them, they have to sign off that they won't sue each other over her estate. The mother never wants to see her children fight after her death, and that is her last wish. I honestly think my client is a genius, and I realize that there are strategies we can implement here for future cases. I'm allowed to share this because it's inspiring and smart. Life insurance can be used at any stage of your life. It can be used for a young kid who's an infant to a successful business person. In this video, I hope that I have covered why anyone should buy life insurance before we dive into the types of life insurance. Please click to subscribe and feel free to drop a comment down below. Thank you and bye now.